How to make $100 trading with your phone in Olymptrade. Hi guys, my name is Ken Omolo, and on today's video I will be showing you guys a secret strategy that I've been using to make money in Olymptrade. So this is a strategy that is not known by so many people, which means that you can only learn about it by watching this video to the end. If you don't have an account in Olymptrade, go ahead and click the link on the description of this video and create your Olymptrade account. Otherwise, let's continue. If you have an account in Olymptrade, let's get started. So the currency that we are looking at today is the Euro USD. The rate of return at the moment is 82%, and my account balance is $906. Okay, so today we will be using a different tool, which is a tool that we've never used before on any of my videos, but I think it is very important that you learn how to use it, especially if you will be trading with Olymptrade. So I'll need you to click on the indicators tab. Click on the indicators tab, scroll down and find William %R. There is an article that I've written about it. I'll pin it on the description of this video and on the comment section so that you can read more about the William %R at your own free time. So at the moment, if you click on that indicator and set it onto your chart, this is what you will see. Okay, this is what you will see. There is a 0 level, there is a -20 level, a -50, -80, and -100. So this is something that is only, I think it's only in William %R that you see these values indicated in negative. So we'll click on that to try and explain whatever each of these levels mean. Okay, so if you click on that, you'll see that the period that is set at on the indicator at the moment is standard at period 14, which means that the calculations that are done with this indicator are based on the last 14 candlesticks. For example, for William %R to come up with the idea that the market is currently trending upwards, it took data from this candlestick 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So it started calculating from this point to this point. So it calculates the highest high that the market has reached at that moment, the last candlestick, the close of that last candlesticks, and the open or close of the first candlestick. So it is a calculation that you can learn how to do, but it isn't really necessary if you don't know math. Okay, so you can use it as it is, or you can change it. If you want to calculate this data for a longer time, you can change that. Maybe let's say you want to calculate for the last 21 candlesticks, then you can change this to period 21. Okay, so then it means that it will start calculating from the first candlestick here dating back to the 21st. Okay, but I prefer we just leave it as it is at period 14. Then the next thing that I'll need us to change, that you can also change or you can use as it is the type of chart that is shown on the oscillator. Okay, so at the moment we see that it is centered. We can change that and take line. Okay, so we can take line, and we can also increase, we can also make these levels visible, level -20 and level 80, -80. Okay, so you'll see them added onto the chart, and that will give you a better visibility. Why? Because in most oscillators, what we look at while trading is where this line is at. For example, at the moment is at the top above -20. This area is considered an overbought zone. Okay, and normally a trader would trade on this level and say that if it is in the overbought zone, then what will happen next is the price will reverse and take a different direction. And if it is in the oversold zone, that is -80 and below, that is an oversold zone, and we expect that the price will begin to rise up. However, there is something else that I need you to learn on this tutorial today that is very important and will help shape your future of trading with oscillators. So instead of trading the normal way, how we normally say, if the line is above -20, that is an overbought zone and you should sell, and if the line is -1 negative 80, that is an oversold zone and you should buy. Okay, so I want you to put that thought aside and try to look at the chart at the moment. What is happening at the moment? Look at it. The market is trending upwards. It is in the overbought zone. As a trader, this tells you that you should trade downwards, which is wrong, because if you look at this, it started trending from this candlestick here, and from this candlestick it has continued going upwards, and it's still in the overbought zone. So if you traded down here, you would have lost on this. If you traded down here, just by luck, you would have won on that. If you traded down here, again, you'd have lost. If you traded down here, you'd still have lost. Why? Because if you trade down and the market does not confirm that signal, then your death as a trader is certain. Okay, so look at this. It goes to the overbought zone, and if you look at the chart, you will see that we have a bullish engulfing candlestick pattern here, which is a continuation pattern, which shows that the market will continue to move in that direction. As much as there is a signal for us with the Williams percentile, we can't trade on that. So how do we change that? How do we make sure that instead of trading on these false signals, you only trade on legit signals and you make money? So that is what I wanted to talk about next, and that brings us to adding a confirmation tool. Okay, so our confirmation tool again is a very simple tool that is available in Olymptrade. Click on the indicators tab and click EMA. So I'll need you to again change it to period 200, which means that prices should be calculated for the past 200 candlesticks. Okay, so what you'll see on the chart if you do that is prices will be either below the EMA or above the EMA. So when prices are above the EMA, what I want you to do is to ignore all the overbought signals that you see on that chart. Simple. If prices are above this line, the 200 line, ignore all the signals that are generated from the Williams percentile. On the same thought, ignore all the signals that you receive from the oversold zone when prices are below EMA 200. Why? Look at it from this point. Prices are below the EMA. If you look at the Williams percentile, it shows that prices have been on the oversold zone for so long, which means that if you are trading, you have been trading up. And what does the market do in turn? It keeps on going down. And if it does that, you lose money. So again, you need to ignore those general principles that you've learned in the past, that when the market is in the oversold zone while trading with these oscillators, then you should trade up, and when they are in the overbought zone, you should trade down. So after we've ignored all that, we've ignored all the signals that we've received from the Williams percentile, and we've said there is no need to trade if prices are below the EMA 200. So what do we do? How do we get signals to trade that are legit, that will allow us to make $100 daily with this strategy? Look at the candlestick chart patterns that are forming on your chart before you ignore those signals. For example, if you look at this chart here, you will see that we have a bullish engulfing candlestick pattern here, and the Williams percentile is showing us an oversold level. And if you look at this from this point, if you look at the market from this point, it started going up to the overbought zone. Again, at the overbought zone, we see the dark cloud cover there. And what does it signify? It signifies that prices will begin to fall, and true to that, you've seen that prices have fallen. So your signal on this strategy is more price action based than it is indicator based. So this is just a confirmation tool, but the main signal therefore is what happens on the chart. Bullish engulfing candlestick pattern, oversold zone, go up. Dark cloud cover, overbought zone, go down. Again, there is a piercing line here. We have the signal from the oversold zone, and what happens next is prices continue to go up. So it is that simple. You just need to learn different candlestick patterns that form at different levels of the market structure and pick your trading direction. I hope you've learned something from today's session, and if you haven't learned anything from this video, then please leave YouTube today knowing that it is a very big sin to trade overbought and oversold levels without using price action for confirmation. If you like the information that I shared on this video today, go ahead and support me by subscribing to this channel. Also, make sure you turn on the notification bell so that when I do more videos about Olymptrade, you will get notified. Until next time, bye bye. My name is Ken Omolo. Take your reward.